Yo guys, what's going on? Welcome back to another weekly forecast slash breakdown. And before we get started, as usual, let's have a look at the trades that we took last week. Talk about this fantastic gold trade that we took, and I know a lot of you guys did get into this trade, and this was absolutely a crazy trade. I want to talk about this and kind of what I was thinking, why I was planning this trade, and sort of how I sort of managed it. So without further ado, let's just get straight into it. So obviously Monday we did try to take a gold trade. It was a bit premature, I believe, and we did take a loss on it. Let's go to the VIP channel, have a look at it. I think it was, where was it? The 27th. Aha, here we go. Right, so pretty much our plan was from London session to get a buy limit, right? Because we saw a structure break, we wanted to attack this buy side liquidity and for price to push up because it was already in a buy zone at the start of the week. What happened is that price continued its push all the way to the high here, right to this daily gap. And then what ended up happening is that price decided to push straight through our zone and then stop us out. This obviously created a lower low, and from this point on I was expecting price to push lower into this daily fair value gap. So from this point I can go now switch over to the chart so I can now show you what I was talking about. So what happened, it was around this point here where price pushed all the way up to that weekly open, and then price ended up pushing all the way down, taking out this low. What we were expecting was for price to come back into here to push higher, because we had a structure break here. A lot of people were looking to buy right here for the price to then attack the all-time high. What ended up happening is that price then took out this low, and tapped back into this daily fair value gap. And that was my sort of backup plan. If price did want to continue lower, that's where it would go. Now this what I'm going to talk about now sort of leads off to the back of this image right here, right? So you can see that there's a potential sort of head and shoulders that was forming, and quite a lot of you saying that you were looking at this sort of pattern to sort of get this right shoulder, and for you guys to sell, for it to sell off basically here and leave the all-time high. But what I was seeing on the other side was, if you go to the daily time frame, you'll be able to see that yes, there is a head and shoulders, but when head and shoulders sort of form above a fair value gap that hasn't been filled, this sort of reduces the probability of a fair value gap. So I'll give you a quick example. If let's have a quick look, see if you see anything here. Actually, let me just draw one out because you guys may say it's hindsight, but let's just say that we have a move where we end up pushing up like this, right? And then this here is your fair value gap, right? Let's just say there's a gap right there. Price has left that, and then what we're going to see is that we're going to see price sort of tap into this, and then now this is where a lot of people would say that, right, there's a structure break here. This is your swing point. Price has broken that low. It's now going to go bearish, right? Because it's, you know, broken a low, and now it's going to switch trend. What I've noticed in my few years of trading is that when price tends to do this and it's in a bullish market, and we've just also tapped into a fair value gap, let's say this is a 1 hour fair value gap as well, this can also be a sort of liquidity collection for price to then straight away continue up, because it knows that sellers are going to get in here, and then it will just go and take the sellers out and then continue its move up. So this is a prime buying opportunity. So this could be sort of changed into that daily fair value gap, which is what we're looking at now, where price is taken at that low, tapped into a daily fair value gap, and this is another chance for buyers to get back in, and that's what I was looking at. So I'm going to remove all of this, and then we're going to go and switch back over to the actual market here, and that's pretty much what happened. If you look at the daily fair value gap right here, this is a Monday, price pushed down, tapped into this daily fair value gap. Obviously on Tuesday I was potentially expecting for price to push a bit further, as you normally would expect, but what ended up happening is that we ended up getting a bullish move back up, and this is where it ended up setting us up for Wednesday. So if we mark up that same head and shoulders that I was talking about before, it was something like this, head, and then obviously this low here broke that low, so it's a structure break, and then you wait for the retracement to then sell again for then price to push down here. But there was blockers in the way, as I was expecting. So daily fair value gaps touched here, okay, could mean that price could push up from here. So the only obstacle in the way is your next fair value gap here, which is the 1 hour or 4 hour fair value gap as well. If price did something like this, right, I'll explain what I was thinking. This is what I was thinking in my head up to this trade here. If price would do something like this, way start pushing down towards here, and then close below this level, 4 hour fair value gaps invalidated, then you'd expect price to continue lower with that FOMC, and this is why a lot of people are selling on FOMC. But what I was looking at is, yes, we have equal highs here, right? These are all the buy side lines I was making, right? Remember, I tend to look at a reversal towards the end of the week, right? If the start of the week is bearish, right? And that's exactly what I was, so I kept that in my mind. I knew that, right? This start of the week here, what did it do? Monday, bearish. Tuesday was bullish, but then at the start of, towards the end of Tuesday, start of Wednesday, which was the FOMC day, price was just pushing back down. So it was kind of getting price back into a better buying position if you think about it before the FOMC. If price sort of stayed up here and kept pushing up before FOMC, we could have seen price push back down, but it didn't. The price was pushing down. So on this move down, we saw all of this sort of liquidity being just left behind and price was pushing down. And where did it push down into? If I go back to the free channel, and again, this is why it's quite important. If you guys want some free analysis, jump into this free channel, man, because I sent it right here at 2:43 on, I believe that would be Wednesday. So I sent this like 2-3 hours before FOMC. So this is what I was saying, that either price would push up from here now, or we'll wait till the price pushes into this 1 hour fair value gap, and then we'll look to buy up, right? And then price was getting closer. It was now pushing back into this 1 hour fair value gap. We go to the next one. And these updates are sent on the free channel. This is not just VIP, bro. I sent it all onto the free channel as well, just because I know a lot of you guys will be waiting. So all I then saw is that once price got into this purple box, can you see? Price is in the 1 hour fair value gap. All I need to wait for is a reversal from here, and then I'll attempt it, because the rest of the confirmations are there. You have all of this liquidity above. If it wants to go, it should go now, because it's in the optimum time. Look at these red folders right here: FOMC press conference, and obviously the interest rate release. And what ended up happening is we normally tend to get a bearish from the start, and then a bullish to end off the FOMC, and that bullish should continue for the rest of the night and into the next day. This is from countless FOMCs that we've traded. We've seen that this tends to happen quite often. So now if it wants to go, let it go. And then what ended up happening is, let's go to the chart for this one, and I'll show you where we ended up entering. We're on the 5-minute time frame here. We ended up getting price that broke out. It didn't leave a fair value gap, right? So I went down to the 1 minute, and because it was like high volume trading anyway, it's not going to be as perfect. But pretty much this is what we got here. So you can see like that. That's what I'd look to trade. It was a very, very close trade towards SL, to be honest. But if it wanted to break the low, I was not going to trade that. And this is what we had. So price pushed up. I then waited for a price to come back into this area. I started buying here, and obviously my stop loss was there. It came very close to it, and then just started pushing up. Once I saw that, I then knew that, right, that's it. It shouldn't come back down. SL's to entry, and let's ride the whole thing. Then that's pretty much it. That's what happened. Price then started pushing up. Let's zoom out here. And each high that was taken out, partials were taken. These highs, partials were taken. The next high was the all-time high, which I wanted to target. Partials were taken. And then finally, that 2800 level, which I've been sort of waiting for probably December, January, and February. And we ended up getting that sort of 2800 taken out. That's fantastic. What a trade. Leave a like, obviously, and don't forget to comment if you did take this trade. And if you're not in the free channel, don't forget to join that. But anyway, we're not done yet. Don't panic, guys. What I'm going to be talking about now is what's going to happen next week, right? Because that's what everyone's wondering, right? All-time highs now taken out. What's going to happen? Right. So pretty much going into next week now, if I remove this, remove all of these lines now, what we have is we have another bullish step right here. If I remove this daily fair value gap, this is your level at the moment, which should hold the price up, right? Because there's been a lot of sort of selling and buying pressure, so there's a lot of orders in this area here. Now that price is pushed up, I'm going to be expecting a potential bearish move for this week. That's what I'll be focusing on. So now if we sort of drop down in time frame and see that, yo, wait, when you're going to get in what you're looking for, we've got this area here. Now this area is quite a big consolidative area, right on the all-time high as well. So I'm not sure if price will push straight through that, or it will sort of bounce back off of it. Now if we get this, I want to see price sort of create some sort of reversal structure, right? And if it gives us something like that and the time's all set up and it's all perfect, then we'll go for the bearish move. Other than that, we wait. We're not going to enter sales now because price could keep climbing. Remember, it could keep going. And if we start seeing any bullish moves, obviously we'll get involved in those. But if you start getting something like this, where price has now broken some of the lows on a higher time frame, like an hour, 1 hour I tend to use because it's more probable when you get those structure breaks, it's more likely to happen, and you get more confirmations. Then yes, sell it, but don't just sell because we're really high, because price could keep climbing. But without further ado, at the moment here, if I sort of draw this right there, you'd want to look for your buys back into this range, and look, that orange box that I drew earlier on the higher time frame, which is your buying range. This is also the buying range based off of this impulse move from that sweep of that low there. So from that, we need price to sort of pull into discount to buy again. So let's just see when price wants to do that. Does it want to pull up? If it stays up here, yes, I'll be looking for sells. If it then pushes back into this orange box, I'm then changing my bias to start looking for buys again to then continue this move. Now, obviously, going into next week, something could happen that's major, that price just absolutely collapses. We don't know. So I'm just going to put that out there, that if price breaks below 27.30 and pushes back down here, or breaks any of these lows, this is when, yes, we will be looking for price to push back down to this area here as sort of a longer term bearish move now that the all-time high is broken. But that's if price pushes back below here. If you want to keep updated, don't forget to join that free channel. I'll keep you guys updated. I think I should end it there. It's been OASFX. Peace out.